We've been looking at China starting to almost do stealth interventions in various parts of the market again, right? To what extent does an overheating in commodities prices really threaten the policy goals here?
Well, I think if you look at the inflation number released last week, you can see that the upstream price and the downstream price pressure, the difference is at an all-time high. So all that means is that the upstream is experiencing very severe inflation, and then for some reason the end demand, the aggregate demand is not fully recovered just yet. So that paints a relatively passive negative picture on the Chinese economy. On one hand, you have very strong upstream inflation, but then at the end of the consumption line, people's consumption power is not fully back online.
What do you make of the PPI-CPI gap then? You were saying that it's approaching the peak that we saw last in the supply side reforms of about 2016. Does that mean there should be a change to your investing strategy for those that have been looking at cyclicals?
Yeah, I think if you look at the historic correlation between the PPI-CPI gap and also the cyclical relative performance, you can see almost a one-to-one correlation between these two variables. So if you think that now the upstream inflation pressure is peaking or has peaked, what that means is that the cyclical relative performance has also peaked. So previously, since June last year, for the last 12 months, we've been advocating people to take on more cyclical risk, so that you can enjoy the rally more, because these are high beta, low valuation names. But now, after a very substantial rally, after you've seen upstream price pressure being at an unprecedented level, I think it's time to take some bets off the table.
Where's the retail recovery? We keep talking about this as kind of the missing puzzle piece, right? Does this suggest really a permanent change in post-pandemic spending?
Right now, it's a little difficult to tell. There's like a dichotomy between discretionary spending and also the staples. Discretionary spending, has been very, very strong, but I think that's in part because people cannot travel overseas, so they spend some of the traveling budget on luxury goods. But then at the same time, the staples consumption, is sort of stagnate. So as a result, the retail sales, the consumption level as a whole, it is still lower than before the pandemic, right? So it is not a very positive picture that, as it seems on the surface.
But just to be a little more specific, what is it going to take to get the consumer to spend more money? Is this a question of, people with good jobs and money in their pockets, they can drive, but the people who are not in that favorable position are waiting for what? Better jobs, more wages?
It's hard to tell. I think right now the consumer confidence is also at a high level, but it's turning lower. So historically, what that means is that the consumption spending and also the bond yield is going to be lower as well. I think recently there has been policies on the property sector. So the authority is trying to curb the property price inflation. Property is a very sort of a mixed bag sector in the sense that people like property price going up, but then at the same time people don't have property. They can't buy into the property sector anymore. So I think that is affecting some consumer confidence.
So what do you expect from the People's Bank of China? There was a little bit of disappointment 2 days ago over the MLF. Renewal, no extra liquidity, the 7-day repos fell short. Is this just the ebbs and flows of what a central bank has to do to keep the reserves stable, or is there something starting here?
I'm not surprised at all. Since May last month, basically the PBOC has been taking back liquidity. All right, so even though the people in the market was hoping for more liquidity so that equity price can go up further, but it's basically not in the plan of the PBOC. All right. So also, right now, because the bond market is in China still yielding a decent yield for bond investors. So portfolio flow into China has been quite strong since this year, early this year. So what that means is that the PBOC is forced to expand its balance sheet at a time when inflation pressure is building. So at the end of the day, that will translate to more risk down the road, and that is a picture that the PBOC doesn't want to see. So as a result, people shouldn't have too high hope on liquidity.